Some people say I make outrageous claims, like when I tell people they can make 2 to 400% in their trading account annually. So let's start addressing some of the bold claims that I make about my trading strategy. First of all, I tell people that you can make 200% to 400% annually in your trading account. And initially everybody says, "Oh my, how can that be true?" Because it's more profit than they have ever realized in any other investment they have ever been involved in. But let's break it down and see how it plays out. There are actually about 220 trading days every year, but for this example, let's just pretend like there's only 200 trading days each year, because nobody's going to work every day of the year anyway, right? So if you have an account with a balance of $10,000 in it, if your average daily profit is just 1%, which would be $100, then at the end of the year you would have earned 200% profit, right? And now let's say that you average 2% per day in profit, which would be $200. At the end of the year you would have made 400% in your account. Now, that doesn't seem quite as crazy, does it? But now you're going to ask, well, how in the world am I going to make 1% in my trading account every single day? And my answer is that you're not. There will be some days that you won't make any money. There will be other days that you might make 5 or 10% in one day. But the historical average for my trading strategy over the past 20 years is that it averages between 1 and 2% per day over time. So let's take a look at an actual trade and see what that might look like. Here is a Forex price chart. This chart is for the euro-dollar pair. This is the most commonly traded pair in the world. The point of Forex trading is to make money as the price moves up or down. You would want to buy when the price is low, and as the price moves up you make money, or you would want to sell when the price is high, and you would make money as the price fell. It's that simple. The price can only do one of two things. It can move up or it can move down. But what makes Forex trading difficult is that the price will move up and down as it moves up or down, okay? Each one of these price bars represents one full trading day. Now, if we wanted to make money on this pair, what would we do? We would want to buy when the price is low or sell when the price is high. To make money, we do not have to stay in a trade from this low way down here all the way up to this high. We just need to stay in a trade long enough to make about 10 pips. A pip is the smallest unit of movement in a pair, and I'm going to show you what 10 pips looks like. This green box represents 10 pips. 10 pips represents 1/10 of 1 penny. That's not much movement, is it? But on the chart, a 10 pip move would look like this. So let's say that you got into a sell trade at the top of this price bar. Now, I'm not saying that you will always get in your trade at the very top of a price bar or the very bottom of a price bar, but with my trading strategy, you will be getting in your trades near the high or near the low of specific price bars that are ready to make a move where we know that we can get at least 10 pips off of the trade. So if we had gone into the trade right here at the top of this green box and rode that trade down 10 pips, that 10 pips would represent the $100 or the 1% that you are trying to make during this trading day. Now that doesn't look so unreasonable, does it? Because there is every likelihood that on this trade, had you entered up here at 1:10:59 If you had held that trade until the end of that trading day, you would have actually made 25 pips instead of 10 pips. And 25 pips would be worth $250 in your trading account, which would actually be 2.5% for that trade. Now, does this seem that unreasonable to you that you could not do this on most days?